In this quick video, we're going to take a look at what actually happened to the property market back in April when COVID-19 was sinking its teeth into the Australian population, and everyone was watching the news and reading papers with bated breath, first of all on their health concerns, but also around what was going to happen to our beloved property market. One of the interesting things is the market actually held up exceptionally well. Now, whether you're a property investor who is aspiring to purchase around that time, or you'd already bought, or you're an owner who's already got multiple assets, either way you were watching with intrigue to see whether the market was actually going to fall apart like some of the headlines were saying. What actually happened though was most of the stock that was on the market actually got withdrawn, which is quite abnormal to see. We also had exceptional pent-up demand when you consider the market actually went through some of its strongest growth in the last 5 years at the end of last year. Which is quite fascinating. So a lot of people were missing out at auctions or missing out in negotiations, and they were hungry to buy a property, especially first home buyers. If we look at the data here, you can see that in a typical year, over a 5-year period, in a typical month rather, there's around 5% of properties that are actually pulled from the market. Now, during that April period in COVID-19, we actually saw about 45% of properties withdrawn from the market. So one of the key things that happened is the supply was pulled out from under buyers. So even though a lot of buyers also put the queue in the rack, there was more vendors than buyers that did so. Now, the sellers that did stay in the market, most cases held their nerve, and agents typically did the same. So as much as there was some opportunity, and there was definitely some property transactions that went through that would definitely excite the buyers out there, the majority of transactions that went through sold for pretty close to what they would have sold for pre-COVID anyway, and that allowed values to stay pretty close to what they were before. What we face now is that stock levels are exceptionally low. So you can see here in this graph that stock levels are sitting around what they would typically be around Christmas time, when there's very, very few buyers and sellers in the marketplace. So for that reason, we seem to be seeing a lot more confidence in the property market now as buyers are returning, because in most cases, if you're looking to purchase a home for your family and you had your deposit saved, or if you're upgrading because you've run out of bedrooms, or downsizing because you're at that stage of life, the world keeps spinning. So regardless of whether we're in a pandemic or not, the property market will always continue. And even though investors do make up a percentage of the market, it's generally only about 30%, which means it's owner-occupiers that drive the market. So what we expect to see over the next few months is low stock levels, increased buyer activity. Everyone's a little bit more cautious, so we will see days on market increase. And if you've got a buyer who's happy to hold their nerve and wait for the right price, they'll probably still get what they would have got pre-COVID. But there's still a lot of anxious sellers out there that may be pre-committed. They may need to put more cash back into their business. And of course, there's things like relationship breakups, divorces. People will be moving for jobs, and we will start to see interstate migration at some point lift as well. So all of these things are going to mean there's more transactions and more stock hitting the market. And I think we're going to see a very patchy market where we may have some sales that are pretty similar to pre-COVID levels, but there'll definitely be some opportunity that sits well below that as well.